Hello everyone, welcome to Just Invest Today, and today we're talking about Alibaba and what happened during the earnings, and we're going to talk about two psychological advantages that you need to have in order to hold on to the stock. Because man, oh man, look how long it's been since we had gains. It's been over a year, man. Look at that. It's down 45%, and it can continue to go down. So honestly, do you think you're going to be able to hold on for another year? Maybe? 2 years? If not, you might have to get out because you can't handle it. Can't handle the smoke. So tell me what you guys think, man. Guys, like this video, subscribe to my channel, man. And I'm going to be providing you with a lot of great content. So right now I'm going to do a quick analysis on the earnings call. I put like a few notes. They're kind of scrambled, but whatever. And this is just what I thought about the earnings call. And then after that, we're going to get into the advantages. So if you want the whole breakdown, whatever I said, go to my last video. I talk about it in depth. I go crazy, whatever. But let's get into this right now. So my positives for the earnings call: growth 29%, overseas business is growing. In Turkey and Southeast Asia, they're growing at phenomenal rates. GMV 80%, 70% growth. Cloud computing 34% growth, which is amazing. Growth of revenue becoming more diversified. It's not just China, which is amazing. Value creation oriented management, and then they're gonna monetize later. Amazing. International development growth could take several years. And I like that because it's long-term thinking. They're not thinking about just now and just pleasing the earnings people and pleasing the freaking analysts. They're not thinking about that. They're thinking about profit in the future. So that's why these psychological advantages are going to help you out, because management is thinking this way. It's not just me. It's management too. So if you're not able to think this way, you might have to get out of Alibaba. I'm not telling you to sell, but I'm telling you, you have to understand the psychological warfare that's going on with Baba right now. So negatives. This is what I found that is horrible with what happened. How bad will the macroeconomic factors hurt Alibaba? Is it just a slowing economy, or is competition hurting Alibaba? Because if competition is hurting Alibaba, this could really harm our thesis going forward, moving forward. So we got to see over the next 2-3 quarters what's happening with competition. Is Alibaba able to recover? Whatever, what's going on? Are the investments paying off? Are the investments paying off? The money that Alibaba makes, they're investing in all these new companies, these new investments. Are they even working? Or is all that money just being wasted? We don't really know, because they're not on the monetization phase. They're still growing those businesses. So we might not see that monetization in the next 2, 3, 4 years. And maybe it's too late by then. Who knows? Is it promotional spending? That's key too. Is it just promotional spending, or is the actual earnings of the business going down? The actual customer management revenue going down? Who knows, man? Is the pick one of two for Alibaba hurting Alibaba's business? Because remember, they had the anti-monopoly regulation fine on their business, and they were forcing merchants to pick my business or you can't pick another. So now that merchants can pick any business, is that hurting Alibaba? Like, we gotta remember that. But overall, even with everything, I'm gonna give you everything. Alibaba only growing 50% a year. Come on, is that really happening? The business is still undervalued, giving us a huge margin of safety, and it's still the most dominant force in China. It has the most GMV in the world. So I still think it's an amazing business. It's still growing. It still has so much undervalued, low investments in the business that I still think it's going to be amazing going forward. So, and this is a question I have to ask you guys. Can all e-commerce platforms produce strong growth going forward? Can they all survive going forward? Does one have to be better than the other? Can they all just grow as the Chinese economy grows and there's more consumer spending, the macroeconomic factors get better? Like, can they all just grow at one? Or is it just has to be PDD's better than Alibaba, or JD's.com is better than Alibaba? Like, can they all grow together? That's my question for you guys. So let's get into the psychological warfare right now. So let's go. Time arbitrage. Time arbitrage. It's so critical, guys. Remember, this is an interesting story, because remember, Charlie Munger, Warren Buffett bought BYD, and you know what BYD did in 2020, 2021? It took off, man. Took off 400+%, man. In just a year, it took off. Guess what happened? The whole years before that, 2019, 2018, 2017, 2016, before that, 14, when Warren Buffett, when Charlie Munger, when Lee Lu actually invested in the company, it did nothing. Zit. Wasn't doing nothing. It was flat. The whole time, flat. So guys, are you able to sit there, and this is another point of it, defer gratification. You're able to sit there and just defer all that gratification for a later date. You understand that Alibaba is going to produce results far into the future. But right now, you're going to have to be able to take that pain. It might not go anywhere for 1-2 years. And that's why Charlie Munger, Warren Buffett are the godfather. They pride themselves. Like Charlie Munger says, one of his best attributes is being able to defer gratification. That's one of his strong suits. He keeps talking about it. So are you able to do that? Guys, if you're not able to do that and you not want those quick Tesla gains, you want those quick whatever, you want those Rivian gains, man, this is not the company for you. You might have to, sell out a loss, tax harvest, and get into another high flyer company. Because are retailers really going to jump into Alibaba now with all the China risk and all of that stuff still overhang on Alibaba? No. So you might not see results in 2-3 years. Are you willing to do that? This goes on to my next psychological factor, pain arbitrage. And this is William Green. He talked about it in one of his podcasts. I basically consumed a lot of his podcasts or a lot of his content recently. And one of his things he talks about pain arbitrage. Can you handle those 40-50% dips? Where serendipity. Can you just handle those dips and not care, not go to sleep angry, not focus on Alibaba all the time? Can you do that? That's super key because remember, Berkshire Hathaway, there was 3 times in Berkshire Hathaway's history. It took more than 50% dips. And Charlie Munger and Warren Buffett were still smiling to work. They were still happy. Charlie Munger said he didn't even care. It didn't even affect him. He was just chilling, watching movies, reading books, not worrying. He didn't even notice the dip. He didn't even care. He knew Berkshire was fine. It's an amazing business. It's still strong. He still trusted in management. He's the management. He still trusted whatever. Are you able to do that? Are you able to take all that pain, man? People are going to be pounding on you saying Alibaba's garbage, China risk, via e-structure, Alibaba's nothing, common prosperity, blah, blah, blah. Like, there's going to be a lot of that, man. So are you able just to take those shots? Like, people are going to continue hitting. It might be even for 2 years of you just feeling the pain, man. You're going to feel it. And then one time, something happens. Maybe Alibaba IPOs maybe Alibaba has some crazy earnings. Maybe they do some crazy investment. And then boom, 30-40% gains in a day. And then you're going to see that continue slowly. Maybe that'd be 3-4 years from now. Who knows? Are you able to have pain arbitrage? Can you suffer right now for future gain? Tell me what you guys think, man. Tell me how you feel about this. Like the video, subscribe to my channel, man. And get back to you in the next video. Peace!